Hey YouTube, it's Aqua, and I'm here to talk to you about what are dividends, right? So I want to talk to you about my portfolio, but remember, this is my opinion only and what I'm talking about and what I'm doing, okay? So currently, right? Currently, my portfolio, we are at we're up we're plus 42 right now. We're 2%, 16% in, which is pretty good. This is open PL, which shows the profit that is lost in your open position at the current price. You know what I'm saying? So that's pretty dope. So that means we're in a clear right now. Like a lot of my stuff, like we're pretty much we're all good. Let me move this up. Okay, so as you can see, JEPQ, we're up. JEPI, we're up. SCHD, right there. Swab, US dividend equality, they're up right now. Carolina's down, and O reality income is down, right, by a lot. So that means we need to go and buy a lot. But anyway, so what is a dividend, right? So I want to let you know, reality income, Swab, JEP, JEPQ all have dividends, okay? The only one that does not have it is Carolina. And to ever find out if a stock has dividends or not, okay, you're going to go click on a profile, okay? You're going to click on it, and this could be for any of the stocks, but you're going to click on it, and then you're going to go to the dividend yield of the actual stock. Each stock is going to have a dividend yield. And the dividend yield shows you how much percentage they're giving out for their bread. So JEPQ out here, big ballers, is giving out 10.15%. And then JEPE is giving 8%, 8.11%. Swab is giving 3.80%. And the Carolina gives out wonk 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 zero. Reality income gives out 5.79%. Okay, so why did I choose these four as my ETFs, high dividend stocks? There's other stocks that has dividends yield that are up to like 42, 32. They're way high up there. So trust me, these are not the highest dividend stocks. But there's different things that kind of play into mine here, play here. So like basically you like if it's too high, then you'll get taxed a lot, because you're gonna get a lot of dividends back, type of thing. At least that's what I heard of. Like, correct me if I'm wrong, because I know there's a lot of you smart individuals out here. So please comment, if I'm talking out of my but so like the higher the dividends is, the more, excuse me, you get back. But some are high, like validity, like it might be too high risk. Like the highest ones I think change the most. You know what I'm saying? Like I just think it's not good for taxes. So these ones are low dividend yields, but they are most valuable. Like they've been here for years, 70 plus, years going ham. So yeah, like this is really good. So I'm going to show you an example. So, and a dividend is just compounding. So basically, the longer you stay in the market, the longer you have the stock, the more dividend you're going to get, which you can get a dividend monthly, weekly, daily, yearly, depends on what the stock is. O does monthly. JEPI does monthly. JEPQ does monthly. Schwab US dividend does quarterly. So they do quarterly, they do 5 times, right? Or four, I forget. But they give you it each time, and they give you a bonus dividend too. And they pay you by the share. So they only pay you by the share for the dividend. So each stock a share that you own, that's how many dividends you're going to get paid. So you times that to figure out how much dividends you're going to get. Depending on the interest rate, that's what you're going to determine on what it is, right? So I have the dividends over here on the corner. So we're going to go to over each one, and I'm going to show you what compounding really does. So over here, right? Over here it shows, right? So Schwab, like I said, it pays quarterly. So 6th, the 9th, and the 12th. Okay, I got paid 26 cents, 26 cents, 28 cents, right? And I reinvest every single time. So each time they're going to reinvest. So every time I get paid by a dividend, it's going back into that stock. So think about it. Just imagine the pot just getting bigger each month or quarterly because it's reinvesting back into itself. If I keep putting money into that individual stock, if I keep putting money into Schwab, SCHD, then the more money I put into it, the more dividends I'm going to get, because the more stocks that you have is the more dividends you're going to get paid on. You know what I'm saying? So follow me on that. So as you can see on the right side, I was getting paid those months, and the money keeps going higher and higher because that's what it's going to do, especially if you keep reinvesting into yourself, because it's buying more stocks. So that means you're going to get more dividends. That means your amount is going to go higher. Okay, so it's really, you don't even have to time the market with these ETFs dividend stocks. You know what I'm saying? Like, you don't have to, figure out like a mathematician or whatever, go to Hogwarts to figure it out, because all you have to do is stay in the market, stay consistent, keep buying the stock over and over again, put like $1, $3, $4, $6, $10 in, whenever you can. And the next thing you know, it's going to keep compounding. And next thing you know, the stock is going to buy its own stock back. You're going to have enough dividends to where it won't be 28 cents. You're going to be getting whatever, you're going to be getting the amount of the stock that you own back. It's going to be ridiculous. You know what I'm saying? So from there, we're going to go to JEPI here. JEPI, as you can see, they pay me each month, the 7th, the 8th, the 9th, the 10th. Now, for some reason, the 11th, the 12th, for some reason, it's like it's broken with the money here, as you can see. But like, as you can see, like, so for the 7th, it paid me 3 cents, right? They did pay me under that, but I don't know why it's not showing it. Wait, actually, no, it's not. No, it's not. Okay, so from here, right, as you can see, the 8th is 2.15, and then the next day, the same day, they gave me 18 cents. So you know what I'm saying? So then, bam. And then the next month, the 9th, they gave me more than that, right? Okay, as you can see, the quantity is going higher. This is how much stocks I have with them. You know what I'm saying? Like right now, how much shares I have. So it went up. So it went up again, 279. Okay, next month, it went up again. I'm in $3 range now, or just about. Yeah. Oh yeah. Yeah. My math is bad. We're at the $3 range. Let's go in there, right? That's for the 10th. Go up again. We in the 11th. We have 277. Goes up to 13. That's up. We in the 3. We in the 3 again in December. Going up there, 313. So it's going up each time, as you can see. Go to reality income. Reality income pays every single month. This one only pays straight through. 7th, 8th, 9th, 10th, 11th, 12th. Okay, you go here. It's 2 cents at first. Okay, bam. 274. 276. 278. 279. 283, and so on and so forth. The longer you stay in the market, the longer you continue to get more shares, you're going to get more dividends. You're going to get more money. It's going to add up more each time. You know what I'm saying? The more stock you get, the more dividends you get. You know what I'm saying? So just keep going. Just keep going with it. Find a stock that has more, and then you're going to get more dividends from doing this. Trust me. As you can see. All right, we got the 7th, 8th, 9th, 10th. They paid me twice in 11th and the 12th, so we're going to see what that's about. So we got the 7th. The quantity went up. The 4, 305, okay, 322, 328, 333, went to 3, 319, so that means it went to 3 something. Next month, December went to 387, which went to $4. Next one's going to go to 5. Like, it's going to keep going up. And the more we put in there, the more we're going to go up. That's what dividends are. So like I said, just do your research. Look up the best low risk ETFs. And like I said, don't take my word for it. Let's go into the stocks here. Okay. Let's go to the stocks here. Let's go to JEPI. Let's go to analysts. Oh, there's no data, but it's a buy. All right. Go to reality income. There's no analyst. Wait, there is analyst. Hold, you buy. Buy this. They're saying hold because we're going down, down, down. So wait, I'll be making another video for this. When to buy stock, when to not buy stock, but whatever, right? But yeah, but anyway, buy. Okay, But you know what? Since you're here, if it says hold, that means it's going down. It is going down right now. They're saying to hold because they're saying wait till it gets to its bottom, then buy more of it. Like Rudolph just came and knocked on the chimney door. You know what I'm saying? And then you buy it. Strong buy after that. So you could buy it at its lowest. Not like me, but I'm bull. So I'm buying it when it goes down. I don't care. I don't care because I'm investing. I'm treating this like a savings account. I'm putting the money in. Who knows what the below is going to be? I don't care. That's too much for me. I need the game. I need to do tech videos. I'm not a rocket biologist. You know what I'm saying? I'm going to buy it right now because it's on sale and it's Christmas time and we don't know how to act, techies. So what you're going to do is you're not going to hold. You're going to buy because you're a bull and you're going to keep going down with it because you already know it's going to go up. It's gonna go up, dog. You know it's gonna go up. You know it is, and we're gonna get them dividends. Dog. You just seen what just happened. So you already know what it is. Like it's a buy. JepQ, it's a buy. Squid, it's a buy. Jeppy, it's a buy, and it's for the long haul. Get these dividends, and that's what dividends are. Let's get it. Let's go. I'm gonna see you in the next video. Peace.